Hello, everyone, and welcome back to another episode. Listen, I have to go on about how when you're paying your loan and your credit card, it is not two payments. I know what you were taught in school, but what you were taught in school is all wrong. Why? Because I'm going to show you how to condense those two payments into one. So before we do that, go ahead and like, share, and subscribe with everyone that you know so that they can see that school didn't tell you everything. All right? Are you ready? All right, so let's go. Here we have the loan. And I know a lot of people, they get nervous about this because they're thinking, my goodness, that's two debts. First of all, are credit cards debts? I know you've seen it on the news. I know a fella, his name starts with a D. He goes on about debts and debts and debts. Credit cards are debts, credit cards are debts. But after what I show you today, okay, I want you to solidify this information inside of your spirit, man, of your heart, of your mind, all right? Because this is going to get you out of every bondage, trap that you have maybe set for yourself and others have set for you, okay? So watch this. This is going to be your line of credit right here, be it a credit card, okay? Be it a line of credit, business line of credit, personal line of credit, it doesn't matter. And over here is your loan. Now, we were taught in school that these are two payments, right? Two, okay? And there's nothing wrong with that. All right, and I can see how they say it's two payments, but not when you pay it the velocity banking way. Does that make sense? Okay, so you have an income, don't you? All right, so your income is over here. Okay, and I know you have your expenses, but right now we're just going to focus on the income. We're not even going to put the expenses down yet. We're going to focus on making sure you know, okay, that the line of credit and the loan, it's one payment when you're doing it the velocity banking way, okay? So your income comes in, and what do you normally do with your income? You leave it in your checking account, don't you? Okay, so you leave it in your checking account, okay? Picture that as a check. Look, I'll even put a check mark there, all right? So your checking account, you put the income inside of your checking account, and from your checking account, maybe you pay the minimum balance towards your line of credit. Okay, let's say the minimum balance is $500, right? You pay it from your checking account to your line of credit. And also, you pay from your same checking account towards your loan, which is what? Maybe $1,200 a month for a $200,000 loan. All right, what? That's a 6% annual percentage rate. So according to the banks, this is one payment towards your line of credit. And this is the number two payment towards your loan. Now, when you're paying like that, yes, okay, that is two payments. But let me show you why I say that when you're paying off the line of credit and the loan, that it's really only one payment. Can I go ahead and erase this? Okay, for clarification. Clarity is power, like my friend Josh says. Clarity is power. So what we want to do is we want to continue to place the income inside of the checking account. For now, they do not allow you to do the direct deposit, which is a shame because I think the direct deposit inside of a line of credit would change the game in our economy completely. All right. Velocity banking changes the game in the economy. It really does. It increases people's wealth and debt elimination. So here we go. We're going to pay one payment. Okay, one payment. And it's going to get rid of the line of credit minimum payment. You'll no longer have to realize this $500 is a minimum payment. Watch. I get so excited about this. All right, I hope you guys are getting excited. Income comes in. All right, where are you going to place it? Inside of the checking account. You're going to place the income that's inside of that checking account. You're going to place it on your line of credit. Okay? You're going to place it inside of your line of credit. That way, what you're going to do is you're going to go ahead and say, hey, I'm no longer paying that minimum payment. I just gave you $3,000, $4,000, maybe $2,000, $1,000. I'm not going to give you 500, huh? Guess what? So this $500, where did it go? It went down to your cash flow. So now your cash flow is $500. Do you see how you increased your cash flow by $500 immediately? That was your minimum payment, but you turned your minimum payment into cash flow. All right. And so you've moved it to the line of credit. So what? What are we going to do now? Now, okay, all that income that went in there into your checking account and into your line of credit, what are you going to do with the line of credit now? How are you going to pay your loan? Don't you still have this debt obligation? Yes. But where are you going to pay it from? Where are you going to pay it from? That's right. If you said line of credit, pat yourself on the back and give yourself a gold star, because that's how you're going to pay your loan, from the line of credit. So let's say you have maybe $12,000 on this line of credit, all right? And you're wanting to hammer down this loan that is $200K total. What are you going to do with a chunk of that money, with a $12,000? Because your $12,000 is your limit, okay? So maybe you'll put $10,000 towards the principal so that the interest can go way down. And as you are continuing to pay monthly from your line of credit, guess what the loan is doing? It's getting dropped dramatically because you're using the chunking principle from your line of credit. Okay? Now, folks, I just want you to know this is one payment. One. Why? The reason why I say it's one payment is because when you put your money from your income, from your checking account inside of your line of credit, can you borrow from your line of credit again? Is that money yours? It sure is. And so the only payment there is that money that's going away from you. We hate that, don't we? But this money is going away from you, the $1,200. So as it goes away from you and as you're utilizing the chunking principle, don't worry. Soon, you're going to be paying this off, let's say within 5 to 7 years. And then this money will go where? Inside of your cash flow. Do we understand? Now, I had an appointment today, but guess what? It's at Eastern Standard Time. I was like, oh, I missed it. I don't ever want to do that again. Please, let me know. You know who you are. We got to talk. I'll definitely work around your schedule, right? That's not going to happen again. Okay, we want to make sure that you are solidified in these elements right here. And if you guys need help, listen, folks, we got a class out. And we also have credit cards that you could have. When you're starting out, we know exactly where to go. Credit cards are the key, okay? Let me know, and we'll go ahead and give you the links, and we'll give you the hookup so that you can connect to information like this and then turn our economy around, all right? So, folks, from 2 payments to 1 payment, the key, can I draw that? Let me see if I can. The key to making sure, that's a key right there, to making sure that it's just 1 payment is that line of credit. And you say, CJ, but do you have to have a line of credit in order for this to work? No, you don't. But that's another conversation for another day. All right, folks, thank you so much for watching. Like, share, and subscribe, and we will talk to you later.